Guys, these are 5 stocks that if you bought today could match or beat the market over the next 10 years based on a simple 9% historical average return. Stock number 1, Alibaba. Now, you know, I own Alibaba, and you should not own a company just because anybody on the internet says it. We're here to teach a process and give you the skills to be able to make better financial decisions to make more money. So Alibaba, $74 a share. A lot of things. I think for myself, I think the most impressive to me on Alibaba is you look at last year's free cash flow of $23 billion right here, and the company's market cap is $189 billion. That is around about 8.5 times free cash flow. You're buying one of the biggest companies in the world, in one of the biggest markets in the world, that has the fastest growing middle class, and you can pay 8.5 times free cash flow for it. Now, are there a lot of concerns around Alibaba and China? Absolutely. There's a lot of fear. In fact, the biggest trade today is shorting China, or maybe it's going long Magnificent Seven. Those are the top 2 trades today, shorting China and going long, which means buying Magnificent Seven. Now, if you're a contrarian, you might sit there and say, well, the most overcrowded trades are usually wrong. So is this correct? I'm not here for tomorrow. I'm not here for the next 6 months. I believe Alibaba is a company that I can own for a very long period of time and make good returns. So let's pull it up in our stock analyzer tool and see what it looks like based on historical 9% return. Now, guys, remember, 9% return has no margin of safety in there. And as our good friend Seth Klarman always says, we need margin of safety because valuation is an imprecise art. The future is unpredictable. We don't know what's going to happen. And guys, humans make mistakes. We're all human and we're going to make mistakes. That's why you need that margin of safety. So reminder, this assumes the market return of 9 or 10%. I'm hitting the analyze button. There's a lot of green here. If my lowest assumptions occur based on today's price, I can make 19% a year for 10 years based on a discounted cash flow. That's if my lowest assumptions occur. My highest one's 37%. Is it likely to be somewhere? Yeah, but I feel like if I had 30 companies I could buy with these projected returns, I'd be a very, very happy investor. Company number 2, Starbucks. Guys, Starbucks has fallen a lot. All-time high of 126 on July 23rd, 2021. We're almost on 3 years now of a down stock. It's currently at $90 a share. Hit a 52-week low, pretty close to the 52-week low, $89 back on October 3rd. Now, guys, Starbucks legalized cocaine, right? Legalized crack. I'm in this weekend. I was in Dallas looking at some property, and every time we see a Starbucks, hey, Lisa, you want Starbucks? Sure. Hey, Lisa, you want Starbucks? Not right now. Lisa, you want Starbucks? Yeah, actually, I'll take it. So Starbucks, I know somebody who actually calls it, until I have my drug in the morning, I can't function. That drug is Starbucks. Now, let's go pull up Starbucks in our stock analyzer tool and see where it looks good. Again, no margin of safety, increasing return on invested capital here over 10 years, guys. They get a great return on the money invested in the business, and they're decreasing how much money is invested in the business with their cash flow. I made some reasonable assumptions here, 6, 8, and 10% revenue growth. Is that high? I don't know, but it's Starbucks. There's a lot of growth potential in the world left for these guys, so I feel comfortable with it. Analyze button. Got a low price of 67, a high price of 140, a middle price of 100, and the stock's currently at 90. So again, if you want to own a company for a long period of time at a reasonable price, this could be it for you. Company number 3, Nike. Love Nike. I just bought myself some killer Nikes right here. Actually, let me show them. Nick, you didn't comment on my Nikes today. Look at these things. So I'm pulling up Nike here. Nike, guys, is a company. By the way, if anybody here knows the original name for Nike, don't cheat. If you know it, put it in the comments below. Please don't cheat. I don't want to Google it, but it's a pretty fun little story. All-time high for Nike, 179 on November 5th, 2021. 2.5 years ago, not even 2.5 years ago, 179. It's currently at 100 with a 52-week low of $88 back in September. Guys, $88 is half the price. Less than 2 years after its all-time high. That's incredible. That is absolutely incredible. Now, Nike is a moat. I mean, if I told you, name me a sporting goods company, who are you going to name? You're going to say Nike. Name me another one. Under Armour, Adidas, blah, 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 snooze. They've got LeBron. They've got Jordan. Jordan makes $250 million a year just from his Nike 5% that he gets, or whatever percentage he actually gets. It's incredible. They're a great brand doing wonderful things, and they're selling more direct now, which is increasing their margins. So let's pull up Nike in the stock analyzer tool. Great return on invested capital, 19% more consistently, 5, 8, and 11% revenue growth. Might be a little aggressive, but I'm okay with that. I also think I went a little low on the PE. I put 17, 20, and 23. It's a great company, and they dominate the sporting goods world. I just look at this going, now they just lost Tiger, but I don't think they really want to be in golf. They're kind of like, just like, whatever, let's get out of golf here. So hit the analyze button. I got a low price of 64, high price of 164, middle price of 104. So we're just a little bit under our middle price. So you're gonna get a little bit better than 9% return if my assumptions become true based on the margin of safety. Now guys, you open this video for one reason and one reason only. You want to make more money. But there are other things in addition to making money that matter, like feeling better, being able to sleep at night. And you are the product of the people that you surround yourself with. If you want to elevate your game, you got to find the people whose natural way of being is at elevated level. I am giving you that opportunity to spend time with thousands of successful, like-minded investors like myself that can elevate your game to a certain standard for decades to come. Now that I've done that, I've surrounded myself with thousands of like-minded investors. I can ask questions. I can bounce ideas off them. They can poke holes in my investments ideas. And just because we disagree doesn't mean we aren't thinking about these things. There are people in our community who are starting their careers, and there are also people on the other end of the spectrum with millions of dollars net worth and retired. So no matter where you are today or where you want to go, you'll be able to talk with anyone who's been where you are and where you're going. I've put millions of dollars into this community and software because this is the software my team and I use every single day to make better investing and financial decisions. You're one connection away from getting the changing connection of your life. And better yet, we're running a great promotion, $7 for 7 days. Click the link below or go to everythingmoney.com in order to sign up for that to change your life. I'll see you over there. Stock number 4, the Googly Moogly. And somebody wrote recently, which I thought was funny. They said, I love watching the videos just to hear Paul say Googly Moogly. They put a comment of that. I think I responded personally. But Google, guys, this stock's at 143. All-time high, January 29th, 2024. Just less than 2 months ago. Now, with that said, Google was at 150-some a couple years ago, and people said it's never going to go below 100. Well, look at this. 52-week low is 93. I think its low in the last few years has been 83 or 84 bucks. So this is a company, guys, that the stock price was falling. People were talking about how terrible the CEO was, et cetera. But if we look at this company, they got a lot of great stuff here. Here's the 8 pillars. Everything to check mark except for potentially the 5-year PE and 5-year price to free cash flow. But guys, does anybody out there really think that 10 years from now, Google is not going to be a much, much larger and more profitable company? And they have so much cash on their balance sheet and very little debt. That's what sustains a business for a long time. Guys, they own the 2 biggest search engines out there, Google.com and this very channel you're watching on right now, YouTube. 2 biggest search engines out there. And you see recently, they're talking about banning TikTok unless they sell or some crap like that. The US government wants to do that. Either way, Google has a very, very long runway, I still think. So let's pull up Google in our history of stock analyzer tool. 5, 8, 11% revenue growth. Again, I think it's reasonable here. Can they do 11? Absolutely. The question is, how do they get there? Is it possible? Hit the analyze button. Guys, at today's prices, 106 on the low side, 250 on the high side, 168 in the middle. So at today's price of 143, if the middle assumptions occur, 11% return based on a discounted cash flow. Again, no margin of safety in there. But if you're really itching to buy something, maybe you sell puts at a lower price, something to that effect. But either way, final stock number 5, last but not least, Intel. Intel is a company I used to own. I actually got out of it for only the reason of it skyrocketed to 50 very quick. I think I got out at 48, and I'd still like to own this company because I was adding to it sub 35 or 40. So let's go take a look at Intel. And guys, I love showing Intel for this reason. This is the historical chart of Intel. This is back in 2000. All-time high, August 28, 2000, $75 a share. It has not hit that point since. Even though Revenue and profit are up multiple times. Why? Because when you overpay for a great story, it can still cost you in the long run, even when fundamentals get better. Remember that over and over. There's one thing I wanted you to remember from our channel. It's that. I said this about Tesla just a couple of years ago when it was $300, $400 a share. I said, I could see Tesla being like Intel and Cisco, where you go up 10, 20 years down the road and the stock is still below its all-time high. Feel that way about NVIDIA potentially. I don't know if that's going to happen because NVIDIA is growing its revenue at insane rates. But my guess is that wherever NVIDIA hits its all-time higher in the next couple years, it'll probably be the highest point it'll see for a long time because the fundamentals aren't matching up. So for Intel, its revenue has seemed to have bottomed. So let's look at the quarterly revenue. December of 2023, $15.4 billion. December of 2022, 14.04. December of 2021, it was 20.5. So it fell 30%. And now it's starting to climb back up again. They're building all these chip foundries. They're building a lot of factories. They're getting a lot of incentives from the government. There's a lot of good things, and they're getting on the AI hype. So could this be a turnaround for Intel? I don't know. Let's go check out the stock analyzer tool. Remember, guys, it's about following a process that works for you, not necessarily being right on every single individual one, but if you apply the same fundamentals to a lot of different companies, you're likely to do well. So I did this. It's important we go over the assumptions here. I did 3, 6, and 11% revenue growth, okay? I did 18, 22, and 26 on their profit margin because over 10 years, their profit margin was 21%, and that's with the crappy last year and a couple other things. So I think they can still do better. Same thing for free cash flow. For PE, 10 years down the road, I put 13, 16, and 20. Same thing for price of free cash flow. And again, I did my 9% return. I hit the analyze button. I have a low price of 32, high price of 110, middle price of 55. Okay. Now, are there more risks for Intel than other ones? Maybe so, but it's got a great brand name, a lot of great stuff going. Guys, if you want to see the 13 stocks that I can talk about that I currently own, watch this next video. Thank you for your time.